criticisms. I mean, you could name the premiums are too high. The agents make too much commissions. If you look at some of the actuarial like persistency data, oh my gosh, look at the lapse rates in the first couple of years. Those are awful. You got like high profile cases like just recently. People look at Ohio National. I mean, they were forced to demutualize, and now they're suspending dividend payments. Oh my gosh, what are you getting me into? I don't know if I want to do this. How do people do due diligence? And why should people bother with whole life when everyone says this is a bad investment? And even if it wasn't, how do I even verify that it is? Like, how would I even know this? If I don't know anything about life insurance, how would I even figure this out?
Well, I think the first step is you got to figure out, well, why are you buying life? Why are you buying whole life insurance? And I think those lapse rates are probably a function of people not recognizing that whole life insurance is a long-term, it's a long-term thing. I mean, I started my career in a life insurance company, so I see how the products are created. I see how what the reserving requirements are. I see what it takes for a large insurance company to actually insure that risk and to put those products out. And are the premiums too high? I actually don't think so. I think it's a competitive market, and you should shop around. But some of those premiums are, I mean, they're there because of what the money is, where the insurance company is going to be investing the money and how they're going to be putting it. So it's not all about salesmen's commissions. I mean, but that being said, I have to say that whole life insurance, it just like I said at the outset, the scalpels will are better at cutting into some things than Swiss Army knives, but you can do so many different things. So it's a whole life insurance policy it's a different sort of product. It's a very, very versatile product, and it's a very long-term investment. And so I think a lot of the bad press just comes from a misunderstanding of what a whole life insurance product really is. I'll just tell you a quick story about when I got my first whole life insurance. I tell the story in the book about this guy from Northwestern Mutual had the brilliant idea of trying to sell whole life insurance to actuarial students at Connecticut General Life Insurance. I mean, talk about outside the box thinking. That was
right.
But he did he was extremely successful because, he got all these bright actuarial students who could understand what he was saying. And
right.
And I remember the first meeting I had with him, he explained the product and, how it was, I didn't need it now. I didn't have a wife. I didn't even have a girlfriend.
Right.
And, but on the other hand, I had a long life ahead of myself, and this is how it worked, and the math worked so beautifully. And so I said, well, okay, but this sounds great, John, but let me go to my boss because I want to know what my boss. So I went to my boss, who was an actuary. I said, what do you think of that? He said, well, because you work for Connecticut General, you can buy voluntary group life rates at a fraction, and here's how much cheaper these groups. So I of course went back to John. I said, John, my boss said this is a way more expensive than it should be. And that's when he said, okay, it's a different product.